Okay, roles of the accountant are always something that students don't like. I suppose I get why it's no number playing around, but it's job roles that you could be looking to go into if you're hoping to go into accounts. Yes, AI is not going to take all the jobs in accounts. Okay, I don't know if me just saying it means it's true, but you're going to need accountants. But anyway, in 3.1 of the spec, you've got management accountant, you've got internal, and you've got external auditors. And in 2026, I'm thinking there's going to be a question on an auditor, either internal or external. I'm veering towards external. Um, Now, obviously, if you are in 2026, you could have used audit. I haven't seen the question, but you could have used audit within the question on published accounts, because that's one of the areas that reassures you that the accounts would be accurate. So if you're looking at benefits and drawbacks of published accounts, that's something you could have said, but you could have flipped on it on its head and said that audits are not always accurate, and there have been issues. I mean, we look at Tesco with their mild overstatement of £330 million worth of profit a few years ago. Anyway, roles the accounts. So I'm going to look at three. If you're looking at them, I mean, they have come up as a 25 marker before. Um, I think this would be more a 3 or a 6. If it is a management accountant, so explain the role of a management accountant. The key roles of a management accountant are essentially creating budgets, so preparing budgets and then forecasting the financial position of the business. Once they've done that, they should be calculating variances, so that difference between actual and budgeted performance, so they can actually make a judgment on how they actually doing, so they can make cuts or they can look at growth or anything. And then the budget can help to see how a certain action could impact the business. There's just lots of forecasting and planning involved in a management accounting position. Equally, standard costing. So if you think about the standard costing variances, cost accountant, management accountant would be involved in setting that standard cost, which helps to set selling prices. And again, you'd be monitoring that. You also look as a management accountant, you're looking at preparing reports. So managers will be asking for reports. There's no strict layout to that, which is one of the key differentials between management and financial accounting, which is another one of the questions I think could come up because it's not come up for a while. However, like I said earlier, I think audit and the auditor role, because it hasn't come up that often, is a little question that could be there. If you look at the internal auditor, I always say it's usually the employees of the company. I think in the textbook it says it is. It's not always the case. You can employ an external company to complete your internal audit. It's not called an internal audit because it's looking at people within the business. It's called internal audit because it's looking at the inside workings of a company or a business. Is usually a company who'd employ an internal audit because of the cost, but they look at the internal workings to see if the financial processes have been followed. We call that internal control. So the control measures to try and help prevent fraud or any issues with the finances in a business. So if there's a payment, they would look and say, oh look, you've paid £20,000 on the 16th of December. I want to see the paperwork that back that up. So I want to see an invoice. I want to see you authorized it. I want to see a record of the payment, everything. So that internal auditor should have a degree of independence. And so this is why really employing companies to do it is good, because they can then say you're not following these internal controls, you need to adjust it. Or if it's someone within the company, and obviously if it's a big company, they will have an internal audit division, and they could then go, okay, there's an issue here and you need to resolve it because you're not following this process, whether it's payroll, whether it is making payments to suppliers, whether it's processing invoices, whether it's chasing customers, whatever it might be, the internal audit role, the key things you've got to be saying is checking to see that things are being followed correctly and that it helps to prevent fraud or misstatement in the financial statements. So internal audit is all about that. Whereas an external auditor, what the external audit is looking at is a more holistic view, and this is definitely someone from outside of the company, and they're reviewing a limited company's set of financial statements. So an external auditor is a really important role. They are appointed by the directors, and their key thing is to review the financial statements, and what they need to do is sign off to say that they demonstrate a true and fair view of the financial performance of the business. So the way they do that is they look for evidence that the accounting concepts have been followed, that there are no reporting issues within the accounts. So they again will be checking through records relating to those final figures. So they could be looking at journals at year end. Is there any suspicious activity that could have been used to window dress the accounts? They'll be checking through invoices. They'll be checking through everything. The other element I've not put on this slide is the auditor will have the role of signing off if they feel that the company is a going concern. So if there's any If there are any issues, which means you could question the ability of the company to be a going concern, so they don't feel they're going to be able to trade for the foreseeable future, there should be a statement in the financial accounts that represents that. Now, there have been issues in the past with the external audit not being as thorough as they would like. I referenced about Tesco and about the auditors of the Tesco's accounts when they were overstating their profit being looked into. There was a massive issue with Wirecard and with German payment firm where the auditors didn't check. That was more internal audit failure, really. They didn't check the validity of some bank statements. But also, when Wilco closed in the UK, they were signed off as a going concern by the accountants at the beginning of that year, despite making reference to liquidity issues. So the external audit isn't a perfect position. Sometimes there's a bit of a conflict, there's a bit of an ethical threat in that there's a self-interest threat in that they don't want to lose a contract, or there's a familiarity threat because they've built up a close relationship, and that means that they don't perform a thorough audit as you would hope. So lots of governments looked into that. But yeah, in the audit report, yeah, there we go. It includes that going concern statement. Apologies, I put it there. So the audit report is what the external auditor puts together to summarise the findings when they've reviewed the financial statements. So they put an opinion on whether it demonstrates a true and fair view. If it's a qualified opinion, that means they are qualifying that statement. So what they're saying is the accounts are okay, however, this element's a problem. So that can be errors, that can be weak internal controls, that can be something about figures that they're not happy with. So if it was, I mean, that year with Tesco, there was an issue with rebates, supplier rebates, and they were stating them, they were not following the accruals concept. If they'd completed the accounts properly, they could have put a qualified audit and say the majority of the figures are correct, but this is an issue. But to be honest, that was such a material misstatement that I don't think an auditor should have signed off those accounts, is the general perception. An unqualified opinion means that in order to, there's no qualifications. It always feels wrong way around. It feels like a qualified would be the one you'd want, but no, an unqualified. So we're qualifying something. So we're saying it's okay, but. So if we're unqualified, we're saying we're happy. They demonstrate a true and fair view. That doesn't mean that they think the accounts are 100% accurate, because that would mean they would have to go through every single transaction, check everything off. That's not possible. And sometimes the worry is that external auditors aren't given sufficient time to prepare an audit, because there is a conflict, because obviously the company is paying them and then they have to negotiate how many days, and there's a cost issue. So there's a lot of problems with external audit. But I'm saying a lot, the external audit's key role is that the accounts demonstrate a true and fair view. They make an opinion on the qualification of the accounts, and they make an opinion on going concern. If they have an adverse opinion, which, let's be fair, this is probably where Tesco would come in, that means they've got serious concerns about the accounts, and that will quite often lead to them reporting to regulatory bodies. So external audit, looking at the financial statements, making an opinion. Internal audit, looking at the day-to-day processes and making an opinion on those. Okay, good luck if that comes up.